Hey, good morning. Thank you guys for joining in. I know it is. I know it's harvest for. I think everybody's going, and I think there's just tons of activity on this nice, cool fall morning. So I'm just going to jump right into it. And honestly, I don't know if we're going to make the full 20-minute allotment today or not, um, because there's so many different things that are out there. I don't know what to do other than just to confess that I can't make heads or tails of it. Like you read articles, um, and some people are bullish and some people are bearish, and everybody has gotten really good on both sides of the aisle at writing very convincing and compelling arguments to support their bias, and and that makes it really hard to filter it out. And um, I think what that's telling us is that in general, if you if you write um, if you're stretching to find facts that support your argument, you really don't have a good argument. There's a law professor I had in legal writing used to say, if you have to qualify something with very, it's very clear or whatever, you're absolutely telling your judge or your opponent that it is not clear. If it's clear, it speaks for itself. You don't have to say it. And so as you're reading, I'm reading bullish people that are saying, oh my gosh, our yield is going to be 170 or below and 49 or below. Demand is going to come roaring back because China's so hungry. They fed all their wheat. That's the only reason that they haven't been buying, is they've just been depleting their surpluses. Those same people are saying, um, you know, uh, soybean crush margins are at all-time records, and the demand is just going to be so robust that we must go higher. And those same people will argue the weather is incredibly bullish, right? The La Nina event in South America is going to burn this new bean crop up for that they're planting. That the supply is just going to continuously dwindle. They continue to make the argument that the USDA is wrong on all of their information, and they're using words like clearly, like obviously, and so anytime you're reading that, you got to take it with a grain of salt, because then you read the bearish people, and their bias is so overwhelming that it really pulls you the other direction. What they're saying is, no, the demand's not here because it's not needed. China's crop was huge. Um, their supply is plentiful. Ukraine's crop is huge. Brazil's was never as bad as what the rumors have been saying, and that they've got plenty of supply. The 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 hog population is all going to die of ASF again, and they've got um, um, such low prices that they're going to start feeding them table scraps again, and that's bearish for soybeans. You can just go on and on and on with what both sides are saying, and just honestly, in my career doing this, I've never seen it more disparate, and a wider gap between the two different arguments. And so last week we made the argument, or I did, that when we have this setup, I think that argues for volatility. And I can't tell you if it's going to be volatile to the upside or to the downside based off of the fundamentals. But what I can tell you is that what these charts are are setting up for something really truly explosive. And what we're going to do is go through weekly and daily charts. And what you're going to see, I'll just jump to the conclusion here, is that the weekly charts are in really, really strong buy setups, while the daily charts are in really weak setups, and maybe getting ready to roll over on the daily side. So you've got strong weeklies, you've got pretty weak dailies, and you've got this huge disparate amount of information that is out there. And I don't know what to do other than just just be intellectually honest and say we can go either way here, right? So here's our weekly chart of corn. And if you're new to this or a little bit new to me, um, uh, higher time frames warrant more respect, a little bit more um, weight, if you will. And that's because the higher time frames are a better collection of trade data, right? It takes a lot more oomph to move a market through support or through resistance on a higher time frame. And when we're looking at this chart, I want to point out what's bullish and what's bearish about it. The bearish thing should jump right out at you, and that is that we did break and close below this trend line now for 1, 2, 3, and if we close below 535, that'll be for 4 weeks straight below this lower trend line. That's not great. That's telling us that the market has broken through that support, and we haven't ignited back through it. Now, the rest of the things on this chart are really bullish at this point in time. We're holding above our longer term cloud. You've got these big long lower shadows that are clearly rejecting the $5 mark. Every time we try to test it, this market's getting bought. And it's getting bought like crazy, right? So the bears press it, and then the bulls battle it back, and it leaves these lower shadows. We're trading above where we were 26 weeks ago, and that's also bullish. And we've been talking about this. What could happen, and what I think probably will happen, is we'll tick into price action, and then this line will start to follow it and mimic it back up. And if this setup is right, then that's what this move will look like to the upside. It'll be pretty explosive, and we'll move at least to 675. What will the catalyst be there? Well, it'll be because everyone got off to one side of the boat, right? The one set of authors, either the bulls or the bears, are going to be proven wrong. It's because they're not right. One of the two is completely off, and I don't know which one it is because I just don't think we have the information or the facts yet. And so, in order to kind of help us decide which way we're gonna end up breaking, we can drill down into shorter time frames to see what they're saying. Okay, so I'm going to drill us down into a daily time frame, and then we'll jump down to a little bit more granular view as well. And I think we got to come back to this one and say, hey, the bias should remain up because there's enough bullish factors on this weekly chart to support that. So I want to say that clearly up front, because what I'm about to do is probably going to make your head spin. Okay, so here's our daily chart of corn. Okay, this is December. We've been talking about this for a long time. We've been in this big consolidation area, and we've been in this triangle. The problem with the triangle at this point is that we're spending too much time down on the bottom of it. We really need to put some pressure on the top side of it in order to validate this count. When we broke through 520 and we started closing below it, that was a fairly ominous sign. The numbers on this screen are from an indicator called TD Sequential. Okay, TD Sequential is an indicator written by Tom DeMark, and it's responsible for plotting all these numbers. And it's a trend following indicator. It helps you identify when a trend is beginning versus when one is ending. And if you look on the upside, you can see these numbers just keep going. They just keep repeating. And that was telling us that this trend was really, really strong. One of the things that it does is it works off of what we call price flips. And anytime a close is greater than or lower than the close 4 bars prior, it generates a price flip and a new count. Okay, we did this back here, and it identifies that day as a really important high or low. So it identified the low of this bar right here as critical. Likewise, another more recent price flip? It it identifies this one as a critical one, and when it counts in it, every successive close is higher or lower than the close 4 bars before it. It generates a new number to 9, and once that 9 is cemented, then that count stays. Okay, and what's significant here is that this 9 and the 6, 7, 8, and 9 closed below this low back here, which is this dotted line plotted forward. And you can see we're consolidating around it, and we're testing it. So if you've talked to me in the last 10 days, we've talked about the number 520 and how important that number is. And this is what we're looking at. And what I don't like at all about yesterday is that we had a new price flip to the lower side on the bottom side of this. So we got a 9 on the report day. We moved back higher. Now we've come back down below it. We've got to get above where we were 4 days ago. 1, 2, 3, 4. We've got to get above this 529 close pretty darn quick. Or what's going to happen is that this is going to accelerate lower to a new 9 and into a 13. 13s are generally pretty significant signals. And, we got one right here. This is where we said, hey, we've got to be hedged. And I've got to be totally intellectually honest with everyone. If this were happening to the upside, if we had broken this line and we're testing it here with a 1-2-1 with this setup, I would be bullish as can be and would be jumping up and down saying, we got to buy it, we got to buy it, we got to buy it. The only thing keeping me from saying that on the bearish side is the strength of that weekly chart. Because these aren't solidified yet and they can turn around. But the next 5-6 days are going to be really, really important. And I don't like closing below this 520 mark at all on this particular setup. Now, if we drill down to a 240-minute chart or a 4-hour bar, and I'm going to put our cloud on top of here, you can see that we are dead center. We're a total 50-50 ball here, and we have no ability to decide which direction that thing is really gonna head. So we've got the weekly chart long, we've got the daily chart threatened to roll over, and the 4-hour chart neutral. I would call that neutral. So I don't know what to say with corn other than I really like having our downside managed and our upside open, because what's going to come out of this chart I think is going to be explosive one way or the other. So we're 70% sold. We're going to stay right where we are, and we're going to stay long calls. From a basis standpoint, we've seen basis weaken a little bit. I'm not going to overreact to that. I think holding it is fine, and holding hedges is wise, because we want to see what happens when we get a little bit more yield data. All right, that's corn. I hope that didn't confuse anybody too poorly. I just don't see enough damage to the weekly chart to warrant flipping to the bearish side. There's still enough here to hold it, and I hope I'm clear about that. All right, let's look at soybeans. Soybeans have a similar setup, although I think they're more bullish than corn is. And the reason is because we have yet to test the 38.2% retracement mark. We continuously reject lower prices because we have the long lower shadows on each one of these. We're testing the top end of where we were 26 bars ago. So as long as we hold above this price level, that remains bullish. If we start to break below it and we start to have a closes towards the bottom end of our weekly ranges, and then the worst thing that we can do is move into our weekly cloud and break lower. That's what we're looking for in order to see it really, really roll over and be bearish. But kind of like corn, soybeans are not behaving real well from a technical standpoint on the daily chart either. We broke our uptrend line, or we broke this trend line here. We've closed below it multiple times. We've tried to get back above it several times. We continuously fail. Now, yesterday we have a hook reversal, and we seem to be rejecting this 1260 level. I think that bodes really well, but we've got to do a lot of work, right? We've got to put some pressure back on the bottom side of this trend line. We've got to put pressure on this 1310 to 1330 area, and we've got to get back into the swing of things on that chart. Here's our sequential indicator on beans. Notice the price flip that came late last week, and we're on day 4 of it. This is a little bit less dire than the price flip that we have on corn, because we're so far removed from this prior line. When we're consolidating right at it, it's a little bit more powerful of a signal than what this is. So I'm not too worried about that. But the only thing going for beans at the moment is the fact that the weekly chart is really strong, and the weekly chart and the daily isn't just accelerating to the downside. That's really the bullish case for beans, is they're not totally dying, and I don't know how else to say it other than I think patience is still warranted until that weekly chart fully rolls over. All right, wheat continues to be the leader of the pack. I think wheat looks really good. So let's talk about these indicators here too. So we're between two price flip lines on the weekly chart, okay? And this 11 up here strongly suggests that we're going to get another 13, which argues for new highs. And that high will probably be above this 805 level as it develops. So wheat is by far the strongest looking chart that we have, and I think it's been banged around quite a bit by the headlines out of China, by the currency situation that's been going on. But I think wheat is still by far your strongest commodity, and I think it's just kind of waiting to see what corn is going to do, because we've talked about this. Wheat can't go a lot higher if corn breaks a lot lower. So it has to be. It's got to know what corn's going to do first. Here's your daily chart of wheat. Same analysis as the corn and beans. Notice we're between these two lines, which means currently we're range bound. We're right dead center of our cloud, and we're trading actually below where we were 26 days ago. So wheat needs to pop up and take out the 722 high and ultimately get up above the 730 number pretty quick. I think if corn can find some legs, wheat's gonna shoot, gonna go parabolic on us if corn starts to work higher. So not bearish at all wheat, not in the least bit concerned about it. If you want to sell cash because you don't want to pay storage, or if you don't want to deal with it anymore, by all means sell it. But I'd put re-ownership on it above 730 with this setup. And I do it right away because I think that's just too explosive of a setup if it were indeed to work higher. And that count is valid until we take out 670 down below it. If we work lower beyond there, we're dealing with a little bit different setup. But for now, all things are good on wheat. All right, we did make it the full 20 minutes. I know that was a lot. I hope it wasn't confusing. Too much stuff out there for volatility to go away. I think we're going to have a big increase in volatility in the next 30 days, and I think managing downside risk with puts or futures is good, but I think we got to have ownership on it too, because we can't get a good guess on which direction we're going to go. I hope that makes sense, and I hope and I don't think I can be much more clear than that. Remember, there's always risk trading commodity futures and options, and if you're going to do so, you should do it in light of your own financial condition, and talk to an advisor before you do it. I hope you have a great week. We will talk to you next Wednesday.